This video is sponsored by Crypto20, the world's first tokenized crypto index fund. Now, the big money that's going to move the crypto market is not going to come from the small retail investors. It's going to come from the big institutions and corporations. Michael Saylor is one of the big names helping to bring in the institutional capital into crypto. He was a key part in bringing in Elon Musk and Tesla after his Bitcoin for Businesses conference last year. And now, right after his conference this year, we get the news that KPMG, one of the big four accounting firms, have just added Bitcoin and Ethereum to their corporate balance sheet as well. So the institutional money is beginning to pick up pace, which is going to bring billions of dollars of new capital into crypto. Now, Michael Saylor recently sat down with the head of institutional investing at Coinbase to get the latest on what's been happening from the institutional side of things. So in this video, we'll be looking at about Coinbase Institutional, and we'll get some stats on the business. Then he explains the one thing that institutions need, and no, it wasn't regulation. And then he finishes sharing some stats on how the institutional adoption right now is exploding. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so the big money that's going to move the crypto market is going to come from the corporations and institutions. And even though the US regulation still hasn't been finalized, you're about to see that demand is picking up regardless. But first, an important message from today's sponsor.
Well, the first one to call out really is the fact that we're the largest publicly traded crypto company in the world. So I think I want to lead with that. At Coinbase, we talk about building the crypto economy. And when we talk about that, we're talking about a more fair, accessible, efficient, and transparent financial system enabled by crypto. When I think about our Coinbase Prime platform, which is really the base layer for institutions here, it's differentiated. And it's differentiated in that it offers a seamless experience between trading and custody. A little more about the company. We've got 73 million verified users. As of September 30th, we had 255 billion of assets on platform. And so, Michael, that represents 12.2% of all of crypto. So we're the largest custodian, I think, by a country mile. What's interesting about that number is that 139 billion of it, or 54.5%, called 55%, is actually the majority of it is from institutions. You know, and that's been a notable change and an increase over the course of the past couple of years. We've got more than 3,000 employees. On the institutional client side, I'm proud to say we have over 10,000 clients. We were, some stats that institutional trading volume was 234 billion. And institutional volume compromises 72% of the total trading volume. So
234 billion over what time frame?
That was the third quarter of last.
Oh, that's a quarter. That's not a year.
Nope. I've got some more stats on trading volumes later in our conversation.
So, some huge numbers coming out of Coinbase Institutional. They now have over 10,000 different clients, and the vast majority of them will only have come in the last year. And now you can also see that the big money is going to come from the institutions and not retail. They are spending over $200 billion per quarter. And just think how many retail investors you would need to generate that amount of money. Okay, next up, to bring in even more institutions, Brett explains that there's one thing that is needed. And no, it wasn't regulation. Check it out.
I've definitely noticed and been a part of the increased liquidity in this asset classes. But I was pulling some stats, and here's some stats to share with you. So everyone knows the story of the crypto winter and sort of liquidity trailed off. And daily volume on Bitcoin was only 500,000, which is not great. In the period from sort of mid 2020 up through the end of last year, daily liquidity volume trade is actually a million Bitcoin per day. Now, that may not sound like a big change, but then if you overlay the price impact on top of that, we're talking about 10x. So 39 billion a day is the average, right, of where we get to. So, modest in terms of, only twice, 500,000 to a million in Bitcoin terms, but 10x in terms of value. And so the market cap, I think the liquidity picture is really important to being able to attract more institutional capital into the space, knowing that you can transact confidently in large sizes at any time.
Okay, so it's coming to life.
It's coming to life. And then one more stat to share with you. So I looked at the number of large transactions. So, and I define large as more than a million. And if you look at that stat, we've had more than a 4 times increase in transactions over a million. So we went from an average of 1,300 per day to 5,500 per day by the end of 2021. And I can't unpick the data to say this is a day trader or retail or this, but I associate that stat with institutional adoption.
So the one thing being liquidity. And the good news is that liquidity over the last couple of years has doubled, which in turn has increased Bitcoin's price by 10 times. And he also mentioned about a 4x increase in transactions over a million. So even more signs that more whales are coming into the market. Now, the biggest news that just came in was that KPMG adding Bitcoin and Ethereum to their corporate treasury. And this is huge news because they aren't just another regular company. They're one of the top 4 accounting firms, which is going to bring some major authority to the crypto sector. And of course, not too long ago, we saw Rio, the first city, also adding crypto to their treasury. Could this be the year that cities all around the world begin to do the same? And hot off the press, the US government has just recovered $3.6 billion worth of Bitcoin that was illegally laundered. Or said another way, the US government has just added $3.6 billion worth of Bitcoin to their balance sheet. A very interesting way to acquire Bitcoin. Hashtag just saying. Okay, to finish up, Brett now shares how quickly the institutional side of the business is growing, and this is despite no US regulation yet, as when that hits, it will be like blowing up the dam. Take a look.
I think the headline stat that institutional assets are, half-half with retail assets, and the institutional business, at least at Coinbase, is really only scaling over the course of the past year to 2, I would say. So I think that's pretty interesting.
What do you think that ratio would have been in 2018 or 2017?
Single-digit percentages, with the bulk of it concentrated with family office and high net worth.
So maybe the institutional business went from like 10% to 50%?
Yeah, about that. That's about right. Another metric would be, my team was 5 people. We've got 150 today. So that's how we're able to have a 24/7 trading operation. You
guys are growing faster than stable coins.
We are growing fast. We're growing as a company very, very quickly, and it's a lot of fun to be a part of it. I think that during the past year in particular, I think the asset class, if I look at anything, if I look at what's on the news on an hourly basis or anywhere else, I feel like the asset class itself has established itself as a place that is appropriate for large institutions, corporates, and others to allocate capital to it. And when I think through the investment activity that we're targeting, I see that growing for sure. And our founder, Brian, talks about the utility phase of crypto, and we're having more and more use cases, right? Accepting payment, commerce, NFTs, other new engagements. That too is bringing in more institutional capital and a diversity of type of institutional client into this space. And so I'm really excited about continuing to build to meet the needs of those that want to do the specific sort of capital deployment into the space, but then also cater to providing the infrastructure I described to enable third parties to create their own native experiences with their own, clients. And so I really see the Coinbase Institutional platform just being differentiated and growing over time to meet the needs of these sort of expanding use cases that we're seeing come to life.
Okay.
According to Brett Tej-Paul, head of institutional investing at Coinbase, adoption and demand is exploding, and they've seen a 5x increase over the past year and now have over 10,000 clients. We just had the huge news that top 4 accounting firm KPMG has added Bitcoin and Ethereum to their corporate balance sheet, and this is before the US has even brought in any regulation, as it's looking more and more likely that it's all heading towards regulation and not banning, which is really going to open up the floodgates to the big institutional capital. As from what I can see, this seems to be the trend going on all around the world. First, we had India this year saying they're going to ban crypto. Now it's India regulating crypto and collecting those juicy taxes. Then we had Russia is going to ban crypto. Now it's Russia taking the lead and wanting a slice of the crypto pie. So the trend going on around the world is regulation, not banning, and this means the best is definitely yet to come, as this was just released from Wells Fargo, and they said we are nearing the hyper adoption phase for crypto. So over the next couple of years, it's going to get explosive. So there you are, guys. Hope you enjoyed. Are you feeling excited about what's going on in the world of institutions? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. To check out the Crypto 20 Index Fund, see the link below. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.